Good morning, everybody. Good morning, good morning, good morning. How's everybody doing? Good? Yeah? Well, so the market set up this chart, and I'm going to pull up here and show it to you. This is a different way to measure the market. Right here. Check this out. Look at the date back here. Last time we came up here. This is the top 10% of stocks by size versus the entire rest of the US stock market. So what does this mean? It means that 10% of the stocks right now represent 75% of the entire market cap of the US stock market. That's we haven't done this since back here just about 100 years ago. And anybody know what happened right here in the late 1920s? Anybody? This is looking a little bit sketch here. And we're actually above what we did in the dot-com bust here. So, yeah. Greater depression. I think we're headed for a greater depression. I hate. I've said that for a couple years now. This is as my man JT like to say, no bueno. I found this chart over the weekend. I felt everybody needed to see this. You got to be prepared for what might happen here. This is getting. Can we go even more ridiculous? Can we set a new record? 80%? You betcha. Absolutely. What's likely to happen though? You see it on the chart, right? We're gonna have a dispersion where those big ones aren't the big ones, or at least not as big anymore. A rebalancing, if you will. It's not that not necessarily we have an epic crash. We may have a tough economy for the next 10, 15, 20 years. It may be really tough as we redistribute wealth and those big companies. I don't know. I don't know how it's going to play out. We didn't have big tech. We didn't have AI. We didn't have all these things years ago. So gotta watch out. All right, gotta watch out. Yeah, uplifting news. I would be remiss if I didn't keep warning you though. Goose and I were talking about this last night. That nobody else is really talking about the fact that it's not just this chart. I keep sharing charts that the economic situations are lining up very eerily similarly that we were right up back here in the late 1920s, right before we had the Great Depression. Eerily similar. Now, how is it going to play out for everybody? I'm not sure. I don't know. I mean, got a lot more people, a lot more money, a lot more things flying around, but I mean, the U.S. has basically entered a debt spiral where our debt servicing payments are more than what we're paying for Social Security. So it's not. There's no easy button to fix this, and it's just gonna rip right. It's gonna keep ripping until the music stops. What straw breaks the thing? I don't know, but the S&P could go back down to 1,000. It could grind down for the next 10 years till we get back to 1,000. And we're right up there near 5,000 right now. That's gonna hurt. It's gonna hurt a lot, right? So I just want everybody to keep it in mind. Like, be ready for the point in time when we got to take action. So, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell anything. All right? Don't buy stuff from gurus you don't trust. Like, make sure you trust people like me. Like, we're out here selling stuff. We'll give you a slick presentation. It sounds like, dang, how come I've never heard of this way to trade before? You probably have. It's just got a slick coat of paint on it, slick words. Make sure you trust the person that's giving to you. Otherwise, most people out there are just trying to make some of your money into some of their money. Don't buy or sell stocks. Don't buy or sell options. Don't buy or sell futures. Don't buy or sell Forex. Don't buy or sell cryptos. Don't buy or sell bonds. Don't buy or sell treasuries. Don't long them. Don't short them. Don't trade them. Be careful. They all involve a substantial risk of loss. And if you desire personal financial advice to know what to do, you got to hire and consult a financial advisor. That's not what I do. I'm not giving financial advice. I'm just sharing how to possibly make a little bit of jingle out of the money, out of the markets. A little bit of money out of the markets. A little bit of jingle. We are down to the last week of February. It is a leap year. We do have the extra day. By Friday, we're in March. Holy moly. Holy guacamole. And it's just crazy, right? Just crazy. Anyway. Hey, everybody. And Chris finally back. Welcome. So, we have load up the calendar for this week. Today, kind of benign. Not really. We've got new home sales coming up at 10. So, about 37 minutes. That may... It could affect the home builders and stuff like that, but we'll see. Stuff like Home Depot, Lowe's. Home Depot already saying that those kind of sales were soft because of reduced demand. It's all on the back of high interest rates, but we may not have even seen the high interest rates yet. The inflation may tick up again just due to the business cycle. We may see it go higher again. That's why Jerome Powell, I think, dialed back on the rate cut talk. Then Tuesday, we got durable goods orders, core durable goods, consumer confidence. And then on Wednesday, we're getting preliminary GDP numbers, quarter over quarter. Then on Thursday, we get some PCE numbers, which Powell likes those better than the CPI numbers, personal consumer expenditures. And unemployment, we get those kind of every week. And then Friday, we don't get the jobs report that straight up on Friday. We get the ISM and consumer sentiment and manufacturing. The jobs report will actually be next week. Anytime Friday's the first day of the month, we don't get the jobs report for the month. They punt it till the next week. As we can see, Friday there, we'll get the average hourly earnings, non-farm unemployment, right there. So, all right. That's what we got coming up. Fun-filled week, it looks like. The GDP and the PCE could make the wheels come off right now. So, got to be very, very careful. Anyway, moving on here. All right. And jumping into the list. What is the list? Jumping into the list. We've got S&P 500 hovering right below my 5150 target there. Just keeps hovering. Hovering. So close. So close. That wasn't the chart I wanted. This is the chart I wanted. Look at that. So close. So close. I kind of expect maybe some resistance there. Maybe. I don't know. We've just been rocking and rolling. Not looking back at all. We could just push right on out to the 1618 up here at 55. Possibly. Possibly. Now, what's the cost of protecting yourself right now? I mean, this could go to 6,000. This could go, if you buy protection now, it's the wrong time. I mean, so this is one of those situations where you know it's coming, but you need to make the precautions to be able to liquidate things. You got to get yourself in a position where you can liquidate things. You can convert yourself over to being long-term bearish. It's going to be a tough market to trade for a long time. That's what I see coming. Unfortunately, it's going to be like 2022 was, except maybe a lot worse. So, anyway, A lot worse, a lot more grindy. Now we'll see multi-year rallies. This is the way this will play out. I don't have it drawn on this chart. I bet it's drawn on the other S&P 500 chart. Let's see. Nope. I don't know where I drew it. Anyway, last week I was talking about if NVIDIA becomes the largest company in the world, we're going to push right on up there to that 5,500. That corresponds with, look at that, at 1618. Wouldn't that be wild? Definitely wild. Here's another one to keep an eye on. Clear a few of these. Nice. All these alerts just stacked up here. Just refresh, reload, clear the alerts. There we go. Look, DGS2 rocking up again. DGS2 is climbing. If we start breaking above the Fed funds rate, they'll actually raise rates. So be careful on that. That's a read right there. That Frost and Pritchard book from Elliott Wave, the Elliott Wave Principle by Frost and Pritchard. It's an interesting read, and they use charts from a long time ago too, and it's funny how they're eerily similar to charts we see today. So, all right, now that I've sufficiently talked crap, let's see what's actually moving today and where we can try to make some money, shall we? So, S5FI still showing that breadth, depth situation, still narrowing. I mean, we're getting a little bit of participation, but not really any to write home about. And this one may continue to decline. This is S&P 500 stocks above their 50-day moving average. As this declines and we keep making like all-time highs, that means the breadth, the number of stocks participating in this rally is declining and declining and declining, and just supports the initial chart I started out with. So the 20-day stuff, just a volatile chart. ES kind of flat to start here. Had a flat start on yesterday at 6 p.m. Just chopping around a little bit. Not really anything super spectacularly awesome. As you can see, we topped out Friday and just kind of just humming along here. We may pop on up and reach for that higher 5150 level on the S&P. NQ, kind of the same situation. We actually reached up, made a higher high on Friday. Finally actually did that. So where are we going from here? I don't know. This could be an A wave. That was a 3-wave down. That could be a B wave, possibly. It was one big move up. Or WX, and we could see a Y. And TSLY did a reverse split, I heard. Or they're doing a reverse split, looks like. CCJ. Going down into the roadmap line. All right. RTY. Just choppiness. Super choppiness. So ES, S&P 500, NQ, QQQ, NASDAQ stuff. RTY, Russell, IWM. If you want to trade those, it's like SPY, QQQ, IWM. If you're into ETFs, SPX, INDX, RTY. If you're into indexes, and you may like, how do you trade the indexes? You go play options on the indexes. You can buy options on indexes. You can't buy shares because they're indexes. And RTY held right where I thought it would. Move down, initial move down. Do we get continuation and break below this uptrend line? This is very choppy. 1, 2, 3, 4, 5. And we may see this break down and head down to this zone. That's kind of what I expect. Oil is just still choppy sideways. If we see it break down below this trend line, probably coming down here initially. If we break out above this high from back here in late January, we're probably going on up to the mid 80s area up here. Same thing every day. GC, careful on that one. If we can break above it's probably going to take a move up above 2062. Now you'd be like, JT has this play with GLD. It's, you know, it's not exactly 1-to-1. I mean, it's not exactly like 10 divided by 10, but we do have this roadmap pattern. If we can get above 192 up here, it's probably game on for going higher. Probably game on. But it's definitely choppy looking. So gold getting slammed a little bit coming in the open because of, I guess, soft Asia news or whatever. And on the 5-minute, we had a wicked candle. Look at that. A flush out. But when you look at it on the daily chart, we've come up, done a 6-minute retrace. We may get the extension lower and finish this move up down here to about 1900. We'll have to see on gold. I'm not certain. This move looks undone, you know, unfinished so far, especially with that low here, the higher low, then a lower low than here. This makes me wonder what's up here. This is not doesn't look like a complete pattern. So Bitcoin chopping around over the weekend, not really going anywhere at all. Saw a little bit of popping, a little bit of dropping, a little bit of just churn. And we look at the spot markets. You can see right here, just we kind of wrapped up Friday on a low. We took it back kind of a little bit and just kind of opened it up here, sitting here. Not really popping, not really dropping, just churn, churn, churn. We'll see how that actually plays out as we head on through the week. Looks like we could, I mean, we're almost to the end of what I thought we might go sideways before we popped again. So let's see if we can pop it. That'd be pretty interesting. We may find resistance at that upper end of the trend channel. Ethereum has a 3,500 target, and we just keep on pushing higher. We just keep on pushing. Keep on pushing, keep on pushing. And where is the trading view? Let's just load up Binance. Oh, that's weird. Oh, because I have it on futures, not all. Dun, 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 dun. Sometimes. There we go. All-time history. Yeah, may top out right up here around 30, whatever, 32, 35. See a pullback, and then another bounce. We shall see. That was just based on an extension of that move. I don't know. Definitely going exponential, though. People getting hyped up on this spot ETF thing coming up in May on Ethereum. Bitcoin has a halving event coming up. Less than 8,000 blocks to go, about 53 days. Once we get under, say, 45, you know, I suspect there's going to be a FOMO rally. People going to see this pick up in the news, and people are going to try to take action to get their piece before the halving event coming up in 53 days, roughly. This is based on blocks, not on time. The time is an estimate. That's why it says estimated time. The blocks, when we get down to this number being 0, when we get to block 840,000, that'll be the halving event. I don't like any ETFs for Ethereum. Spot ETFs are coming. They don't really have any great ones currently. DXY, just kind of hanging right on the roadmap line. That's the upper resistance. This is the support. Down here, 103 support. Resistance, 104.75, 105. We're just turning. If we can break above it, we're going up. If we break down below it, we're going down. And we're just turning sideways. So what's actually moving today? We're seeing DPZ get a crazy pop. Crazy pop right into my actual B-wave target there. Be careful. This could result in an outsized move down. If we stop right in the zone and we turn down, watch out below. They barely beat on the top, missed on the bottom, and we're getting a pop. That pop comes right into the resistance point. Big move down right there. High to low, 618 level, right where we are. Could pop as high as the 786. Sets us up for potential bigger move down. That's a big 3-wave up. 3-wave up. That high, that low. This puts us at the 1272 right there, 487. And we're sitting right in between. That's like the perfect target zone for a 1, 2, 3. Now is the time to be very careful. We may flush it all the way down here on the 3rd wave move. You may be like, JT, what are you talking about? 3rd wave move. This wave down, wave 1, the retrace, and the 3rd wave down would put us down here as an echo of the first move down. Elliott wave theory at play right here, potentially. Right there. First move down, retrace, 2nd move down. Highly cautious on DPZ. Please, please be careful if you're chasing that one. Does not have to go higher. FRPT. Fresh pet. That's the it's not food, it's food, it's not pet food, whatever. That one's popping right into the prior resistance zone. Right into the prior resistance zone. If we can get above that, things look better, but again, we've got that 618 level just above us too. That's not the most constructive pattern there. Not sure on that one either. SMCI, getting a little reprieve after Friday's relentless push lower. And where are we going to go? I don't think we're going new high. I don't. This looks eerily similar to the way GME unraveled GameStop back a couple years ago, and might take us 3 weeks or so to unravel the first move, and it could take us 3 more years to fully unravel this thing, just depending. So we could be sitting out here somewhere over here, time-wise, 3 to 4 weeks. This one seems to be going just a tad slow, so it could take us even a little bit longer even. So make sure you've got enough money if you're trying to play this to the downside. Could take a little bit to get down here. And, I mean, the options market pricing then down here at 200, out in, or up another 200, up that much. But options market kind of pricing a move back to 200 into the long-term options. So the options market's pretty smart, as Sledge said in the chat over the weekend to somebody. You might think that they control the market, or at least run the market. So please be careful on SMCI. This is like lighting money on fire. If you don't want to play, I mean, if you don't like big swings, you don't like to see, gains and losses, big numbers, don't play this one. Don't play it. Don't play it. Don't play it. Don't do it. Don't do it. Don't do it. All right. Just throwing that out there. KRYS. Crystal as a biotech. Ugh. Be careful on biotechs. Biotechs are on my list of things that don't always follow patterns, because we get FDA approvals and denials, and they just take a left turn at Albuquerque, and makes it less predictable. Like, you see this prolonged chop, and then we pop, and then prolonged chop, and then not really a big pop. That's not really patterns I can even mess with right now. MSTR getting a move up this morning. maybe that was enough retrace. We popped up, hit the 1272. We retraced back down to the support level where we gapped from. Churn there. If we can break again, might be have this 900 area in our sights. That's where my order to close my shares is sitting. I bought at 500. Want to sell at 900. I mean, 80% on shares. That's not bad, if you ask me. So we may see that rock and roll right up into that area right there. Now, it's entirely possible the last 2 times we saw this market roadmap line bounce. If you want the market roadmap line, you want the system, you want to know how it works, link is in the description down below, or you can go watch some of my videos on YouTube after we're done here. Either way, if you want it all just like an easy button and a weekly watch list, click the link down below. If you just want to know how it works, I got plenty of videos sitting in the library to help you understand. So that looks like we're going to get one final push up. Looks like 1, 2, 3, 4. Probably get a final push up. Maybe we'll make the 900. Now, the last 2 times, as I was circling back here, the last 2 times that we bounced and ran, we got to the 2.272 level, which would be around like 1,050, maybe as high as 1,090. It's somewhere up in this zone right here. Maybe that's very, very much less likely than right here. This level was 70% likely. This level like 35% likely. This level drops on down like maybe 20%, maybe less. That's 20% of things that set this pattern up do those blast off moves. And the 686, like we're seeing, like we saw hit on SMCI, that was less than 1% move. When we hit this up here, that was a less than 1% move. Typically, we see a large outsized retrace after we do that. And that's why I expect this to come back down. NVIDIA also being equally wild here. And we may see an outsized retrace there. We've gotten some retraces and pushed higher. We've been working it. SMCI didn't do any kind of sub retrace. We just went for it all the way up. Got a severe reaction. I mean, be careful. All right. We were talking about this on Friday. Look how similar that looks so far. See that initial 1, 2, 2, 2. Be careful. This little initial move may take us 3 weeks on SMCI. This one may take us a while. Bigger correction. This is everybody thought they were a genius up here. Now, you may get complacency. You may see people talking about, oh, SMCI just needs a little time and we'll get the next rally going. Be careful, be careful, be careful. Seen this play out several times before. KRYS. Yeah. BRKB. Nice pop. They were reporting more cash than they've ever had before. They're also getting to quite wild levels before without really having any kind of retrace at all. It almost looks like the SMCI move, except it's not nearly as big. BRKB definitely in cash, but we invest on potential gains. So if they're in cash, they don't have a lot of potential upside. We may see this retrace if market participants decide that maybe the upside's not as big potential here. So NVIDIA, we talked about briefly, may be coming to a top. PANW looks like we could be bouncing off the run-up line. An aggressive entry now, more conservative entry up here. Targets 413, 453. ARM is just kind of churning right up to where I drew an arrow. Be careful. Be careful. Hollow. Could it go higher? Sure. But I'd be very careful. Hollow looks like it's grinding its way back down to where it was, down from where it came from. CRM keeps grinding up, grinding up, grinding up. Next upside target, potentially the top of the box here at 310. Box comes from this prior all-time high. May push right up in there and test it right up in that 310 area. LI. Just, that's a gnarly pattern. Whew. It's going to take a move up above 40, basically 48 to really set the stage for 51 or 56. But, oh man, actually pull this over. Maybe 52 or 50, 59. That's pretty rough though so far. Lower high may flush on down. Be careful. CRWD. Looks like that one's working its way on the retrace. We do have an upside target up around 350, but we may retrace it before we can get there. MU. Ooh. MU popping. Didn't get the full drop. Stuff's getting fully cooked. I'm telling you. 96 is the upside resistance, and 76 is the support down here. SAP. Let's see. That's a. Is there another SAP? There is. Just going crazy on that one. That retrace. Next level up, right around 193. RCM. I like the repeatable patterns. When stuff's just going full crazy, everybody's a genius. Everybody makes tons of money. Everybody loves to tell me how wrong I am. Come back when we're in another sucky pullback, and we'll talk about how wrong I am. It's just a matter of time before it happens. I'm just throwing it out there. I don't know anybody else that said within $10 how high SMCI was going. RCM looks like we're bouncing off the 6180 area. We could be going on down. ZS. Ooh, that could have been a roadmap bounce. Let's clear this up. Move all the drawing. Look at that. Came down. That was close enough. Close enough. I'd like to see him touch, but that was close enough. Next upside, 275, 295. Keep just being crazy, but we're sitting at the 618 level, so this may actually push down again. Gotta be careful here. Gotta be careful here. And coin. Coin pushing up. I would like to see coin push down into this zone right here. If we break below that, we could come on down, but this is the area I want to see coin actually hit. We may just extend it on out, target up in the 250 area, but that's only like one move up and barely a retrace. I'm just not interested in getting in the way there at the moment. AGTI, just churning sideways. Got a little pop up into the roadmap line area. Watch for that to retrace. That's 1, 2, 3. And kind of what we look for a corrective move. And we're coming up 10, 12 would be the resistance. If we possibly as high as 11, if we do find that resistance there, could be set up for a move down to 3. 4. Be careful on agility. USD. That one just keeps being wicked. Ultra, that's a leveraged instrument on semiconductors. Be careful. ALVO. Popping on up. Looks like 19. Next upside resistance. ALT. That's a biotech. Be careful on biotech. Dell. Like I said, SMCI has nothing special. Dell does the same freaking stuff. They're not up 9 gajillion %. So be careful out there. Be careful out there. Be careful out there. Could see Dell popping on up. 95, 105. Don't have big retraces in there, but hey, if they're going to catch up to SMCI levels, Dell might go up to like 220. HCP. Ugh, nasty chart. That looks like a veritable dumpster fire right there. Just need a reverse split, but got to go lower for that. Decliners weren't a ton of decliners. MGDL or MDGL, biotech. It was a decliner. Now it's back up almost flat. PDD. China's still getting hit pretty hard. Be careful here. If we make a lower low, this could be a 5 down. We could get a 3-wave up and continue the decline on PDD. If we do that, I may actually short it. PPG getting slammed a little bit into the roadmap line. Lunar, guess what? Their lander tipped over. Caught the saw a picture. They caught the top of a Dollar General, I guess. Gotta watch Dollar General popping up everywhere. Got them on the moon now, apparently. Just kidding. Just kidding. Something went wrong. They tipped their lander over. Look at that. Same pattern as SMCI right there. Look. If I zoom it up where we can see it. Ignore the numbers, but look. Down. Retrace. We draw it. 76. Down. Be careful. We're probably coming back down here. That's the same bubble pattern. Does it have to? No, it doesn't have to, but that's the same bubble pattern. You see it, right? Everybody see it? Everybody see it? Looks the freaking same, right? Less candles. Same pattern. Look. Be careful. mRNA. That was a 3-wave up. That low, that high. We have support right here at 90. If we get below that, probably coming on down here at 80, maybe 70. Let's see. Rio just keeps pushing lower. Ugh. Ugh, ugh, ugh. Now the deal here, look, that move down, initial move down, retrace the 50%, push down again. We could be nearing a completion. Right there, 63 potential to find support. And look, that just happens to be where the box was before. Funny enough. That's so weird how coincidences happen in the markets all the time. Be careful on that one. All right, that was kind of the list for today. So if anything I said was helpful, beneficial, let me know in the chat. I appreciate it. And if anything was helpful, give me a like. Give me a thumbs up on the video. That's awesome. Interacting with the video helps YouTube know the video was helpful for people, and they push it out to more people. So I appreciate it, everybody. If you want to go deeper with me, links in the description down below. I have Discord running, and my bias for the day, or my expectation for the day. I kind of expect us to pop a 5150. I have to say, kind of expect it at this point. We're so freaking close. It'll be a bummer if we don't just pop that last little bit we need. I mean, we had the high right there. We're only like, oh, that's way high. 5150. And we only need like 40 points off the high from yesterday. That's it. So that would be pretty sweet. And be careful out there. We may miss it. We may just come up shy and retrace. So stay on your toes. That's what I got. I expect that 5150 to hit, and then we'll see what happens. So we may grind it in here until we touch that, and then watch out what happens next. All right. I'll be in Discord and trading the rest of the day. So if you need me, ping me in Discord. If you aren't subscribed to the channel, subscribe to the channel. If you're tuning in later, watching this on a replay, you'll have to leave a comment down below. Let me know what you found useful, helpful, and I'll see you tomorrow. Same bat time, same bat